What's up, traders? Sandro O'Connell with Pristine Capital coming at you with yet another market recap video. It is October 4th, 2021. Please go ahead, click the like button on this video and subscribe to my channel. Today, we're going to be talking about the wild price action in the indices, really just this continued malaise that the market is in. We're going to talk through all of that. We're going to go through some of my trades for the day and really just how I'm handling this market. Before we get into all that, quick risk disclaimer, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades. All right, let's jump into it, team. So today we had another bloody day in the markets, and that bloody day was led by the NASDAQ. And look at this, the NASDAQ was down 2.1%. We have the SPY down 1.29%. IWM small caps were again showing relative strength, down 0.91%. And the Dow Jones also showing relative strength, down 0.92%. So we're basically seeing this very violent rotation in the market where we've been talking about this theme for the past couple weeks, but investors were way too overexposed to the same group of names. It was pretty much all the mega names, the Apples, the Facebooks, the Googles, Microsofts, all those, and then some of the high growth, high valuation names. And, we hit a weak period of seasonality. We have some issues with the government, trying to get this debt ceiling passed. And it's just coming at a poor timing here, given this rotation that we're seeing. We have the Fed taper going on, and that's impacting the interest rates market, which is really making these cues a bit weaker. So yes, definitely several headwinds behind this market, but overall this down move is pretty controlled, all things considered. I added a new column to this little dashboard here. This is the volatility column, and this number over here, the plus 8.56, this is going to measure the volatility index for each of these respective indices. So this one here is, just the VIX. Then we have the VXN, then the Russell volatility index, which is the RVX, and then for the Dow, the DVX. So what I'm seeing in the volatility market is clearly, Q's volatility is really spiking here. And this one's actually making new swing highs, whereas the volatility index in the Russell and in the Dow Jones, definitely a bit less benign. In the Russell, definitely. In terms of breadth, market breadth was very weak today. We had the strongest breadth in the small caps with 34% advancers. And then we had the weakest in the NASDAQ, only 11% advancers. And take a look at this. So we have Apple down big, Microsoft, Nvidia really feeling the pain, Google, Facebook, Amazon. Take a look at what happened to Facebook today. There were just a bunch of negative headlines surrounding Facebook. So look at this. Facebook, they had, I believe it was like a user outage. They have all these regulators coming after them. We're already getting this rotation out of the mega cap names. So yeah, this one definitely in the dumps over here, actually approaching the 200-day simple moving average. So yeah, a lot of these mega names, just not looking too great. And then, yeah, you can see some of these other names. Tesla showed some nice relative strength today. And then Oracle, which is a bit, lower valuation. It doesn't have that same risk of, everyone being packed into it. So yeah, definitely, some big carnage across these mega names. Let's actually take a look at these headline indices right now. Because it is past 6 o'clock for our late night edition, the futures are open for trading. And yeah, so we're getting this, choppy action. And what's really interesting about today's candle is although, the percentage down was pretty big, market down over 1%, this was an inside day. And what I mean by an inside day is that the price action all occurred within the prior day's candle. So our high for the day was lower than the previous high of the day, and our low for the day was higher than the previous low of the day. So this really, even though it may seem like, oh my gosh, the market's falling off a cliff, that's really not the case based on the candlestick. This is showing some indecision in the market, but clearly, we're still in this downward trend channel. We got rejected from this monthly value area, so yeah, definitely momentum that we're seeing to the downside. But take a look. So we've been in this down sequence for 5 weeks now. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. And this is going to be day 22 of this downward sequence in the market. This is the 5th week of the down sequence. Keep in mind, for the COVID crash, there were 6 weeks of the downtrend. So yeah, we're, in my opinion, are we closer to the beginning of this or the end of this? In my opinion, we're closer to the end. I think really the question is, though, are we going to get some explosiveness to the downside and actually, make a run at this 200-day moving average? Or can we just, kind of base out here like we're doing and just continue to carve this and exhaust the sellers? Because yeah, after 20 something days, market days, not even just calendar days of selling, I would like to think that at some point these sellers are going to run out of ammo. But we'll have to see, what happens, what the market brings us. Let's take a look at the VIX. And the VIX is putting in basically a doji candle. But what's interesting is we're remaining in this elevated volatility regime. On Friday, it looked like, hey, the VIX really just, gave up the ghost and put in a big red candle. This might be the end of this volatility sequence. We might start just dribbling lower. Today showed, no, that volatility remains bid. And I think, the primary reason why is because we have this impending government shutdown ahead of us. If the government shuts down, then there's a ton of social security payments that can't be made, military payments and spending. There's just a lot that would sort of like shut down and not, be functioning properly. So today we had some interesting moves in the treasury market, and you can see this bounce that we saw in these 10-year treasuries. Looks like it was getting sold today, and we'll have to see how these 10-year treasury futures do tomorrow. But yeah, the time for the government to have all this dysfunction is definitely not when the Fed's about to taper their, asset purchases. Definitely not. This is just coming at, a really interesting juncture in the market. Well, let's see what happens. Let's take a look at the NASDAQ. Yeah, huge down day today. Extended range red candle. This is when you're in this down sequence for the NASDAQ, where it's like you have these huge down days and then you just consolidate for a couple days. And the market, makes no progress to the upside. And then it's just another huge down sequence. Like, I think for anyone that is long the NASDAQ, you really want to see a legitimate bounce. You don't want to see just another 3 days of sideways action for the NASDAQ after this big drop. But at this point, the NASDAQ's getting awfully close to this VPOC down here at about 14K. I would not be surprised if we took that VPOC out now that we're so close to it. It could function as a magnet. So I'm actually going to be looking at that in terms of, potentially putting on either like a butterfly for that level or some sort of, short play. And then the Russell, this just continues to show the relative strength. So the Russell, you can see, was our best performer on the day, although it was down. And what's interesting is that we're trading so close to all of these key moving averages. They're wrapped around each other. So on one day, it's like, all right, we're above all the key moving averages. Then the next day, oh, we're back below them. We're pretty much like right on the cusp. And, we're stuck in this new monthly value area as well. Yeah, Russell looks like it's definitely trying to get some traction. Russell no longer making lower lows. We continue to see these higher lows. And the Russell as well, for today's action, really just put in an inside day. For this overnight session, I can see we're up 0.03%. I think the market overall is having more success when we open up either flat or even a little bit weak, rather than, these prior days in this downtrend where we were getting these huge gaps to the upside. And now let's take a look. We have our cryptocurrencies. Let's take a look at these. This is another tell for me that, it doesn't really seem like the market is in, crash mode. Because look, we're seeing strength in the cryptocurrency market. If there was some sort of like systemic risk, these assets, they all become very highly correlated. We wouldn't see Bitcoin, ripping to the upside out of its own down sequence. Let's take a look. So yeah, you can see we have this little downtrend. September is a very weak month seasonally for Bitcoin, and we just broke out of it. Now we're above all the key moving averages. So in terms of where I want to be most exposed, cryptocurrency is definitely one of those areas of the market, and that's how I'm currently positioned. So yeah, Bitcoin looking great. Ethereum very similar, broke this downtrend above all the key moving averages, and now we're just kind of consolidating here. So Ethereum, the pattern this is putting in is actually very similar to the pattern the NASDAQ is putting in, where you get a leg higher and then you just consolidate sideways, except the NASDAQ is getting the leg lower and consolidating sideways. So it's the difference between like a high base and a low base. So here, sideways consolidation, then a breakdown. So yeah, cryptocurrency definitely looking buoyant, which is great. If cryptocurrencies were also just getting slaughtered, I would probably be out of all my longs. But this, to me, the fact that crypto and small caps are strong, that's telling me, hey, there's some rotation going on, but I think we can make it through this. Let's take a look. Let's go to our sector map. Yeah, sector map today was ugly. So areas showing relative strength, we have energy. This energy ETF was up 1.63%, and the regional banks also very strong, up 0.36%. And then we had utilities up 1.38%. Don't really want to see utilities being the best performer. That's very defensive, so that is negative. And then we have the gold miners up 1.16%. Some of these high growth areas of the market, and this is why I made sure to get out of those. Once you have interest rates on the rise, it becomes such a difficult environment for some of these themes, like the ARK fund down 3.58%. We have the ARK G down 4.02%. That's in 1 day of price action. So it's definitely important to be in some of these other areas. Like for instance, look at real estate. It was only down 0.2%. Industrials only down 0.54%. Materials only down 0.44%. Transport's only down 0.4%. So I'm clearly just seeing this rotation going on under the hood, where during the sell-off, where are investors buying the dip? In these cyclicals. Style factors, see a very similar dynamic. High div, low vol, our best performer today. Not what I want to see as a market bull, but we are seeing cyclicals were barely down. They were down 0.13%. And what else did we have here? Yeah, that was showing the main relative strength other than high div, low vol. Worst performers, growth was down 2.16%. And then quality as well. Quality is a very good proxy for the FANG names, because the FANG names, huge companies generate lots of cash flows. By all standards, those are the quality companies. So yeah, definitely seeing some weakness. And then, I'll just point to this seasonality again for the S&P 500. So we're in the beginning of October. It's October 4th. We're flipping the calendar to October 5th. And we're probably getting somewhere close to, the seasonal bottom. Who knows what the rest of the month is going to bring for the markets. But for this S&P 500 seasonally, we might see this almost like double bottom in October. And then the seasonality gets a lot better. And that's another reason why, today the market was red. But I feel comfortable with that. The market's got to work this out. We do have all these like political issues going on. But yeah, I think, a little patience goes a long way. And let's take a look. We'll check out my trades for the day here. Let's take a look. So I stopped out of this SBLK common shares. And SBLK, this was one that I added on Friday. Looked very strong. This is a shipping name. And then today, these shipping names really just gave up the ghost very quickly. They were very weak and on very high relative volume. So sometimes this happens, you buy a stock for a breakout and then it just does, the exact opposite of what you want it to do. And this is very reflective of the current environment that we're in. So right now we're in a super volatile market. Yeah, index trends definitely under pressure. So this kind of comes with the territory of, trading in this environment. This is why, my trading volume over the past couple days has been significantly lower, just because we're experiencing things like this. So I just made sure to stop out of this. Okay, boom, what I expected to happen didn't happen. We pulled back to the 20-day moving average, and that's that. And then in terms of some options trades, I took these Netflix October calls. And Netflix, this breakout in the morning did fail. Just because of the weakness in the NASDAQ QQQ, in my opinion. Yeah, we closed above this 20-day simple moving average. We closed above this 9-day EMA as well. So I think if we get some sort of bounce in the market, I think Netflix will definitely participate in that. And then I did stop out of my AMD. I took some November calls for AMD, stopped out of these for $294. I'd paid $610. Luckily for me, this was a smaller trade. You can see this one has 1 star over here. And AMD, this one as well, like in an environment where the NASDAQ's very weak, this stock, I believe I tried to play this, for the breakout. And then we just had, some unexpected, weakness in this stock along with the weakness in the NASDAQ. So for this one, my calls went out to November. I was like, let me take these off. I can allocate this to a much better position, such as, something in crypto. So yeah, I took those off. And those were the only trades that I did for today. Let's take a quick look at our options market and see what was going on there today. Let's see if we can get a feel for the market psychology. We're going to pull up our Vig Tech. Okay, so we'll go to our options matrix. Let's take a look at our options races. We'll kick it off with that. Yeah, I think for this environment, you want to be patient. You just want to make sure that you're not swinging for the fences. So like, say if you're getting chopped up, like today, I sort of got chopped up on a couple of these trades. You just want to make sure, okay, I know this environment's a little bit weaker. I'm going to make sure I'm doing less in this environment. Make sure that you're trading small, when you are trading. Tesla, SPY, Amazon, JP Morgan. So this is another dynamic that we have. Another thing that makes me a little bit more optimistic. We have earnings season starting in 2 weeks, and a lot of these companies are getting beaten up into earnings. Earnings historically, the odds are never really in your favor being bearish into earnings. It's pretty much all these companies, they set these super low estimates, they bunny hop over the estimates, especially these companies getting beaten up. Yeah, I think that's a good thing overall. So JP Morgan, we saw a lot of flow, $1 billion worth of flow in here. And take a look at this. I've been very bullish on the financials, except that I'm not playing an individual name. I'm just using the XLF ETF. Take a look, JPM over here, the 1.17 billion, all call options, primarily going out to 2022. These aren't like deep out of the money calls. For the most part, they're all in the money. So yeah, it looks like some players just adding some exposure to the financials, and they're using JP Morgan as their proxy to do that. JP Morgan, closed down only 0.11%. So look at this, a stock like JP Morgan made a fantastic run. And while the market's been very weak, JP Morgan is really just consolidating, kind of flagging out. If we get some market strength, let's say it's tomorrow, let's say it's the next day, whatever it is, JP Morgan really looks like a solid, breakout candidate. I don't think many players are looking as closely at the banks. Let's take a look. So we had JP Morgan. Let's take a look at what else we have on our TradeScape. So we have Netflix, we have Google. Let's take a look at Netflix since I traded that one today. Yeah, seeing some call options going up for October. These are shorter term. Yeah, some November calls. Yeah, this looks like a lot of short-term calls going up here. We do have some puts as well. These shorter-term puts. And we'll take a look at one more. So let's see what was happening with GM. Had an announcement today. Yeah, we're seeing some October activity. November activity. Let's take a look at the chart of GM. Okay, so this is a name that had some strength in the pre-market. It looks like this one may have been, really taken down just by the overall market weakness. Still closed at 1.6%. Another name that I currently have on that showed some nice relative strength today is this ONDS. This could be a name that I actually add to tomorrow. So ONDS, this is they do drone technology, and especially, related to the transports, their technology could be used in railroads. And ONDS, take a look here. Designs, develops, manufactures, sells, and supports full max software-defined radio platform in the United States and internationally, base station and remote radios. And then you can see here their direct sales force and value added, blah, blah, blah. Pipeline operators, security, commercial, and industrial drones and defense markets. So this is more like an industrials play, an industrial input / technology. And ONDS, take a look at it. This one's been pretty strong, had this huge move on high volume. Now it's consolidating on lower volume. While the rest of the market was deep red, ONDS had a nice green day. So this is another thing where I'm like, it's not fun when the market's just like ripping to the downside, but I'm having some of my names actually trading green while the market is really deep red. So that's typically not what happens when the market's literally about to fall off a cliff. Typically all the correlations go to 1, and it's just a bad sequence for pretty much everything simultaneously. Before we go, let's take one last look at our futures here. We have the NQ up slightly. We have the ES up slightly. It looks like all these are basically unchanged overnight. So if this environment, if you're struggling and you're like, oh my gosh, I'm stressed. I know a lot of traders are. I'm really not. I'm pretty even keel right now. This comes with the territory. I've been doing this for quite a while. These volatile patches, just come. For me, it's all about just making sure I'm in the correct themes that I want to be in. I'm not getting too over the tips of my skis with risk, not really in anything I'm uncomfortable with. If you find that you're in this environment and you're like, oh my gosh, my stomach is turning, the market was down today, this was the worst day of my life, that's a good indication of, hey, maybe there's something you can trim up. Maybe you can add a hedge to your portfolio, something of that nature. But with that being said, hope everyone has a good trading day tomorrow, and I will see you all next time.